Welcome to AI in 8 minutes or less, your daily AI update. Today, we're unpacking a brewing battle that could honestly reshape the entire tech landscape as we know it. On one side, you've got the traditional, cash-burning AI giants making headlines every single day. And on the other, well, there's a quiet but fiercely competitive uprising of decentralized networks, and they are fundamentally rewriting the economics of artificial intelligence. In this explainer, we're breaking down the core sources behind this shift, and I gotta tell you, what's happening beneath the surface is absolutely fascinating.
Okay, let's dive into the staggering number. Anthropic is rumored to be targeting a $1 trillion IPO. Right, that is a trillion with a T. But beneath this sky-high valuation lies a massive looming problem. When you look at the financials and the infrastructure demands of these centralized giants, there's just an incredible amount of token waste and inefficiency. We're talking about companies that are having to raise tens of billions just to cover their compute costs. They're essentially building valuations on top of fundamentally upside-down economics.
Because here's what's actually happening behind the scenes. These large centralized AI companies, they're seeing massive usage, sure, but zero profits. They are heavily subsidizing token costs for the end user. Basically, they're burning through billions of dollars on data centers, desperately trying to acquire chips that are in massive shortage, all while struggling to achieve actual profitability. It's an environment where companies literally have to keep raising more and more cash just to keep the lights on and subsidize those inference costs.
But, the ground is shifting quickly beneath those giants. Just look at this explosion in open source AI models. Last year, they held a mere 2% of the token usage market share on routing platforms. Today, that number has skyrocketed to 45%. Models like China's DeepSeek V4 Pro, which jumped to 1.6 trillion parameters, are proving that the centralized monopoly is really starting to crack. The open source community is stepping up, and they're eating up market share at an unprecedented rate. So, this brings us to the ultimate showdown. It's really a Goliath versus David approach. Centralized AI requires spending hundreds of billions of dollars constructing these massive physical data centers, battling over scarce NVIDIA chips and maintaining enormous payrolls. Decentralized AI, on the other hand, just incentivizes the global compute that already exists. It taps into GPUs sitting on desks and in server racks all over the world, paying them dynamically to coordinate and train models. Now, to really understand how David is fighting Goliath here, we need to talk about networks like Bittensor, and specifically this concept of a subnet. A subnet acts a lot like a massive decentralized tech company, but completely without the bloated payroll. You don't hire employees, you don't process invoices, and you definitely don't pay for idle time. Instead, global miners just plug their hardware in and compete to provide AI compute or solve specific tasks, and they get rewarded in crypto emissions. It's essentially automated payouts distributed directly from the blockchain. The crucial point here is captured perfectly in this quote from our sources. That's like capitalism times a million, the most ferocious form of capitalism ever invented. Why? Because on a Bittensor subnet, you only reward the miners who successfully complete the task. If 100 people try and fail, well, they get nothing. You only pay for excellence. And because of these cutthroat, hyper-efficient contest economics, decentralized AI operates at roughly 1/10 the cost of traditional centralized AI companies. And what's super fascinating is who's noticing this efficiency. We are right in the middle of a massive compute migration. For years, Bitcoin miners have used vast amounts of electricity just to solve arbitrary math puzzles for rewards. But now, they're actively approaching networks like Bittensor to repurpose their GPUs. They're realizing that providing actual, usable AI compute offers massive profitability and upside compared to standard blockchain mining. It's just a natural evolution, right? Hardware moving to where it's most valuable. Let's move to case study 1, Reezy, the real estate oracle, to see how this builds into real-world applications. Check out this accuracy comparison. Zillow spent millions upon millions of dollars building their internal Zestimate AI, which sits at around 95% accuracy. And fun fact, that actually caused them to lose money when they tried to buy homes based on those estimates. The Reezy subnet, however, utilized the decentralized mining competition to build a property appraisal model that hits 98% accuracy, and they did the whole thing for just $250,000. That is the true power of paying only for the best results. But Reezy isn't stopping at just appraising homes for tax authorities. They're using this highly accurate decentralized AI as a trusted oracle or data feed for decentralized finance. The AI appraises the property with near-perfect accuracy. That data feeds right into an automated smart contract. And boom, the protocol can instantly issue loans in digital dollars against that real-world asset.
It's a massive decentralized property lending protocol built entirely on top of AI consensus.
Moving on to case study 2, Vanta, which brings us into decentralized prop trading. Now, what's really interesting about this is how Vanta completely outcompetes traditional firms. In the traditional world, you pay a fee, you jump through a ton of hoops, and maybe you get $250,000 in funding. And if you win, the firm might use loopholes to delay or withhold your payout. Vanta, on the other hand, uses decentralized AI to monitor and evaluate traders, offering up to $2.5 million in funding. That's 10x the standard. Plus, payouts are handled by verifiable smart contracts. You win, you instantly get paid. No nonsense.
But here's the absolute genius behind Vanta's business model. They don't even need the subnet itself to be wildly profitable from entrance fees. In fact, they actually burn those fees to support the token value. Vanta's true edge is that they are aggregating the trading behavior of all these highly successful vetted miners. They take that resulting intelligence, what the sources call Nostradamus-level trading signals, and they package and sell that data to the market. So you can see, decentralized AI isn't just about saving costs, it's about generating superior, marketable intelligence.
When we pull all these threads together, the decentralized AI advantage becomes pretty undeniable. You have hyper-efficient tokenomics operating at literally a fraction of centralized costs. You have fair launch networks where no single venture capitalist controls the supply, creating immense trust. You have instant access to a global decentralized grid of GPU power without needing to build a single massive warehouse. And as we just saw with Resi and Vanta, you get immediate, real-world utility in multi-billion-dollar markets. This whole setup creates a massive moat against legacy tech giants.
Which leaves us with the ultimate question. As the centralized giants burn through cash to subsidize their operations, will decentralized AI win the $1 trillion arms race? The momentum is certainly shifting. If you enjoyed this, subscribe to AI in 8 minutes and never miss what matters.